watching Chairman's Briefing, and I'm Rachel Lee. This episode is brought to you by Trifecta Gold. Let's get started. Gold prices remain steady within tight trading boundaries. Markets seek fresh direction as prices test technical resistance levels. Now, trading patterns suggest prices need new momentum to establish their next move, whether it's up or down. As gold watchers know, the metal saw a sharp pullback in November after reaching a historic peak of $2,790 per ounce on October 30th. The price retreat created an attractive entry point for investors who remained on the sidelines throughout the rally this year. Swiss refinery executive Robin Kolvenbach reports increased demand across multiple segments. Private investors demonstrate strong interest in minted products, and institutional buyers have also stepped up their physical gold purchases. The price correlation resonates particularly well in India, which is a crucial gold market. Indian buyers appear more comfortable with current price levels at just around $2,620 per ounce. In India and elsewhere, since consumers have seen gold rise above $2,700, they're psychologically comfortable with the current price. But market stability remains essential for sustained buying interest, as volatility confuses buyers and forces them to wait for a clearer trend. Although President-elect Donald Trump's America First policies have pushed bond yields and the US dollar higher, and of course created significant headwinds for gold, a more combative trade relationship with the White House could ultimately serve as support through 2025 for gold. Why? Well, unprecedented escalation of trade tension could revive speculative positioning in gold, according to Goldman Sachs. Not only that, the U.S. government's growing debt could prompt more central banks to increase their gold holdings. The bottom line is that factors driving gold to record highs have not disappeared, and it could get even more intense from here. McEwen Mining's subsidiary, McEwen Copper, is raising $2.5 billion to move forward with construction of its Los Azuelas copper mine in Argentina. Earlier this week, the company said that the environmental impact assessment for Los Azuelas has been approved by Argentina's San Juan province. Next key steps include publishing a definitive feasibility study in the first half of 2025, with the potential start of construction in 2026. According to Reuters, an incentive program under President Javier Milei is spurring activity in the nation's more fertile mining regions. It's attracting the likes of BHP, which closed the country's only copper mine in 2018. Los Azuelas is expected to produce about 175,000 metric tons of copper per year and aims to qualify for Milei's incentive program. The scheme offers 30 years of tax credits, lighter custom duties, and a progressive easing of capital controls. The latest geophysical survey out of Trifecta Gold's Mount Hinton project suggests promising signs of a large gold system. Technical readings match patterns seen at other major gold discoveries in the Yukon. These include Snowline Gold's Valley deposit and Sitka Gold's RC deposit within the Tombstone Gold Belt, where over 17 million ounces of gold have been discovered since May 2020. Mount Hinton is located immediately to the southeast of Hecla Mining's Keno Hill mine and mill complex within the Tombstone Gold Belt of central and eastern Yukon. A new partnership has emerged in West African gold exploration. Montage Gold plans to acquire a 19.9% stake in Sanu Gold through a share exchange that's valued at $5.5 million Canadian dollars. This strategic move strengthens both companies' presence in Guinea's Siguri Basin, which is host to Anglo Gold's Ashanti Siguri mine and Nord Gold's Lifa mine. Sanu has also attracted the Lundin family, who joins the venture with a 10% investment. This follows earlier commitments from Anglo Gold Ashanti, which secured a 14% position this September. Montage Gold CEO Martino De Ticcio steps into the role of Sanu's chairman. This leadership change signals deeper collaboration between the companies as the partnership focuses on accelerating exploration across Sanu's three main gold permits in Guinea. Following a period of inactivity, Blue Moon snapped out of its funk after a management shakeup and a financing in August. The Vancouver-based junior broke out from its sub-nickel trading range and ran up to recent highs just north of 40 cents per share before trading was halted at the end of November. Why? Well, because of an announcement that represents a massive transformation for Blue Moon. The company plans to spend over $60 million to acquire Norwegian copper assets. This amount dramatically exceeds Blue Moon's current market size, making this a company-changing transaction. The financing structure is where we'll focus for a moment. Blue Moon plans to issue shares at 30 cents each to pay for the acquisitions. Additionally, they aim to raise up to 50 million Canadian dollars more through a unique unit offering. This substantial share issuance signals major dilution for existing shareholders. In situations where companies announce transformational deals involving significant share dilution, stock exchanges often halt trading. This pause allows investors time to digest the news and its implications of share value. Blue Moon expects these Norwegian assets to position the company as a key Western copper developer. Trading will resume once regulators complete their standard review process. Canada's uranium miners are confident that only they can meet U.S. demand. In a retaliatory move following the U.S.'s decision to ban imports of Russian uranium, Russia announced that uranium exports to the U.S. will be temporarily banned. Since then, Canadian miners have accelerated output and forward contracts to supply U.S. energy companies. But they're now worried about possible tariffs from U.S. President-elect Donald Trump. Travis McPherson of Vancouver-based NextGen Energy says that Canada is in a good position to negotiate any tariff proposals, pointing to the fact that the U.S. relies heavily on imports. McPherson added that the potential tariffs on Canada demonstrate the need for the country to have indispensable goods that the U.S. industry needs and cannot get elsewhere or domestically, just like uranium. BHP's regulatory timeout on pursuing Anglo American is over, and they're free to relaunch a bid. BHP's previous pursuit sparked intense market attention before its withdrawal last May. Although BHP's chairman Ken McKenzie recently suggested that the company has moved on from its bid for Anglo, BHP later clarified that McKenzie's comments were not intended as an official statement under UK takeover rules. So speculation continues to persist that BHP may revisit its pursuit of Anglo, driven by its ambition to expand its copper portfolio. Their flagship Escondida mine in Chile exemplifies this focus, which received a $5 billion investment to combat declining ore grades. The market now watches for BHP's next move, a major milestone for Lumina Gold in Ecuador. The company secured an exploitation permit with attractive royalty terms for its Cangrejos gold-copper project. And Haywood Securities says that the terms are slightly better than expected when compared against industry peers. Lumina is committed to $25 million in advance royalty payments to the government, split into 4 stages. Royalties start at 3% for gold priced below $2,225 per ounce and rises to 8% for prices exceeding $3,225 per ounce. The project gains additional momentum through 2049 with an extended mining concession. Market observers anticipate potential acquisition interest from major producers as the project advances towards its 2025 feasibility study. And that's all for this episode. Before you go, please become a subscriber and maybe leave us a thought or two on what you thought of this week. Thanks for being a part of Chairman's. We'll see you next time.